Okay, now we'll take a look at exercise 10-4. I'm not going to bother with this first paragraph here. This company processes claims. So in the month of September, 15,000 claims were processed using 4,500 direct labor hours. The company incurred a total of $4,950 in variable overhead costs. According to the company's standards, 0.25 direct labor hours are required to process a claim, and the variable overhead rate is $1.20 per direct labor hour. So required, part 1. What variable overhead cost should have been incurred to process the 15,000 claims? How much does this differ from the actual variable overhead cost? Okay, so 15,000 claims, they should have taken 0.25 direct labor hours each, which means the total direct labor hours that should have been used were 3,750. Each one of those hours should have been cost $1.20 per hour, which means that $4,500 is the standard for the variable overhead costs. If we had used the standard hours per each claim and the standard cost per hour, we should have used 4,500. We compare that to actual. They used 4,950. The standard only allowed for 4,500, so they used more. They used $450 more. So that means it's unfavorable. In part 2, break down the difference computed in part 1 into a variable overhead spending variance and a variable overhead efficiency variance. Okay, so again, just like the exhibits, I think exhibit 10-7 might be the example for this one. So first we have to calculate these three amounts, and then we use those again to get our spending variance and our efficiency variance. So the first one is actual hours times actual rate. So actual hours, 4,500 direct labor hours, times actual rate. Now here, I'm just going to point out, so there's two ways. You could be given, like we are here, we're given the total variable overhead cost. So this is essentially our actual hours times the actual rate, because this tells us what they paid. So it's $49.50. Or we could be given the amount per direct labor hour. Like, there's different ways this number can be presented. So you could just put in $49.50 and leave it at that. Or if you want your actual hours times your actual rate then is $4,950 divided by the number of hours, 4,500. That'll give you, it shows you down here, $1.10 per hour. So you can calculate that out and then have 4,500 times $1.10 per hour, which is your $49.50, or you could just put in your $49.50. So sometimes you might be given this number in total, sometimes you might be given the $1.10, and you have to calculate it out. So just be aware of that. At the second part, actual hours times standard rates, or actual hours again were 4,500. Our standard rate is given here at $1.20 per hour. And the third calculation is our standard hours times standard rate. So standard hours we calculated in part 1 above at 3,750. Standard rate is given at $1.20 per hour. So now that we have these three calculated out, we can look. 4,950 less 5,400 is negative 450. So that's a negative number, so it's favorable. Or you can look at it again and say your number computed using your actual rate is higher than your standard rate. Sorry, is less than your standard rate, therefore it's favorable. 5,400 less 4,500 is positive 900, so it's positive, so it's unfavorable. Or the number computed with actual hours is more than the number computed with standard hours. So the actual was higher, so it's unfavorable. And then you add these together to get your total variance, which once added together is 450 unfavorable. Or again, you can use your formulas. So variable overhead spending variance is your actual hours times actual rate minus standard rate. Actual hours, 4,500, times your actual rate, which we calculated up right here, $1.10 per hour, minus your standard rate, which was given at $1.20 per hour, is negative $450, negative number, so it's favorable. Variable overhead efficiency variance, standard rate times actual hours minus standard hours. Standard rate, $1.20 per hour, actual hours given at 4,500 hours, and our standard hours we calculated up here, $37.50. You get positive $900, and it's a positive number, so it's unfavorable.